Welcome to the AACFB's 2022 Meet the Funder webinar series. My name is Monica Harper. I'm the Executive Director of the AACFB and I'll be your host. Our presenters today are Nicole Miller and George Pelosi with NewLane Finance. NewLane Finance is both a funding source member and a gold sponsor of the AACFB, and I'd like to thank them for their support of the association. Before I turn it over to Nicole and George, I'd like to go over a few items to make this webinar more enjoyable and informative for everyone. During the presentation, you should see a Q&A box that allows you to ask questions. If you have any questions during the presentation, please submit your questions in the box and they should be answered by the end of the webinar. Please review the chat box for communication between attendees. The entire webinar should take no more than 30 to 45 minutes. For those of you who'd like to review this webinar at a later date, it will be posted on the 2022 Meet the Funder page of the website and will be emailed to the AACFB membership. At this time, I'd like to turn it over to Nicole and George. It's all yours.
Monica, thank you very much. And thanks to everybody who's taken the time to learn a little bit more about NewLane Finance and our capabilities and our commitment to the broker and third-party originator channels. I'm George Pelosi. I'm the president of NewLane, and I'm with Nicole Miller, one of our senior and most valued members of the broker team. And I'm going to take the first two slides to talk a little bit about NewLane, what we're all about, where we're from, why we're doing what we're doing. And I'll turn it to Nicole to get into some of the specifics that might be more interesting to the people on the call overall. As Monica said, we'll take questions at the end. If there's a question that you have that we're unable to fully answer at the end, we'd be happy to go offline and connect with you outside the webinar. So NewLane, who are we? Why are we? What do we do? We were founded in 2017. My colleague, Dan Dyer, and I founded NewLane in 2017 after having worked together for 15 years, plus or minus, at another company in South Jersey. We took that company public. We did lots of fun things with that company. But in 2013, I had decided to midlife retire. Dan followed me shortly thereafter in 2014, and I had no intentions of really getting back into the market. Shortly thereafter, about 3 years of midlife retirement, we were approached by a regional bank in the Philadelphia market saying, hey, we want to build this asset class. Can you guys come build it for us at Beneficial Bank? It's WSFS now. We'll talk about that in a second. Dan and I talked long about it. We said, if we're going to get back on the horse for one last ride on the merry-go-round, let's make sure we go and do it in a way that we feel good about. And let's make sure our legacy is something that we look back on and say we built something the right way, hence the business lending done right vision. We're going to talk about that in the next slide, but the first couple of things we did when we formed the company, we created values. Values, everybody has values: integrity, passion, commitment to excellence, and teamwork. But we also created behaviors around our values. So we're trying to build a company where, we're working, we're trying to do the right things for our customers, our employees, and the shareholders. We call it our three-legged stool, trying to do the right thing on all fronts and doing it in business lending done right. We actually started originating in mid of 2018. So we're really only 3.5, 4 years old in originations, where, as you can see on here, we just moved up to 87 on the Monitor 100. We were 96 last year. So not as fast a growth as I'd like yet, but we're going to continue to climb the charts, hopefully. We're headquartered in Philadelphia, and we have a lot of experience. Dan and I together, plus a lot of our leadership team, has a lot of experience in the market. As I mentioned, WSFS Bank is our parent. They purchased Beneficial Bank. We came along with that package. And WSFS really values the platform we're building. They don't have the asset class inside of it, and they basically have given us committed funding and a clear path and a long runway to $1 billion+ portfolio. So I got a lot of capital I'm trying to put to work prudently and cost effectively, as well as credit wise. So I'm trying a lot of capital I'm trying to put to work, and the broker and third party origination channel is a critical aspect to our business. Nicole, do you want to take it to the next slide? So what is business lending done right? When I described it, there's no magic to the words. It's it when you see it. We tried to create a company that, as I said, respected the customers, our partners, our employees, and still try to generate returns for our shareholders. We deliver, obviously, like everybody else does, fast and flexible financing. And we're staffed with a dedicated team. We have Nicole. We have several other broker reps. We are a full service funder. We have a strong presence in the third-party broker channel, but I also have a vendor group, and I have a healthcare group. We have an end user group that's developing, and I also get some of my flow from my WSFS partners that are in the banking market. WSFS is a bank located in the tri-state area outside of Delaware, New Jersey, and Pennsylvania. We at NewLane are national. Just like the prior business we built, we are across all 50 states and all equipment categories, 100 plus equipment categories, 100 plus industries, et cetera. We're agnostic to equipment. Our average, Nicole will get to it later on, but our average ticket size right now is that smaller, upper micro ticket, small ticket, 25, 35K. We can do up to $1 million. We'll go small as $5,000. Business lending done right, as I was mentioning, it's the dedicated team, not just on sales. We have credit, operations, marketing, funding, legal. We've all done this before. We're not, we're a new company with a startup kind of vibe, but we've done this before, built a successful company. We're looking to build another one here twice as fast as we did at the old shop. Speed and convenience, we all know that. You got to have that to stay in the game. Fair and transparent funding. What do I mean by that? No hidden fees. I think we have one of the lowest doc fees out there. We have no evergreen or no long-term lock. We have a 7-day stated grace period in our lease, knowing that if people are going to be late, there's no late fee charged until after that. So we try to be, again, fair and transparent in the sector. And again, we're a trusted and stable funding source. So what does that mean? We are committed to this sector. We're not a Johnny come lately. We don't run when things get tough. We don't, if credit blips up, we're not running for the hills. Proven not only by our commitment now at NewLane, but at our prior company when the recession hit, others are running for the hills and the funding sources. We stayed true and committed to the sector. We didn't do as much business because our funding also was impacted, but we still did and originated brokerage business as we continue to run our business through the recession. So again, business lending now right. My feeling is it when you see it, and hopefully you'll see it with NewLane. I'm going to turn it over to Nicole to take you through all the details, and I'll be hanging on and maybe adding in as she goes.
Hi, everyone. Thank you for joining us. So here at NewLane, we really count relationships and not transactions. When a broker comes on with us, our first expectation is that we're meeting a need for you, for your customers, but also you're going to be with us long term. We don't want the email of, hey, I have one-off transaction. We want the, hey, I've got this program or I'm looking for a funding source, and we want to make sure we're aligning with you to help you close more transactions. With that, and the long-term mutual success, we know our brokers rely on repeat customers. So your customers are always your customers. If they come back to NewLane asking for more funding, we will always refer them back to you. So while we have a separate section for dealer and end user, we also have within our system the ability to block the two sides off. They do not have access to your customers. And once again, if your customer calls in, it will automatically be rerouted back to you. It won't go into a pool that may not be assigned to you, and it's to NewLane's other departments.
I know, if I can jump in, if I may, Nicole, I know that is
Yeah.
probably a buzzword if people want to understand that. You can rest assured, going back to business lending done right, we 100% rely on what Nicole just said. The wall that we've built cannot be peered over by the other side. And gosh forbid, if I ever catch anybody peering over it, they're going to be walked out the door. We understand to play in this market, you have to have that trust, you have to have that reliability, and you have to respect the way the business comes to you. And we do that here at NewLane. Any questions on that, anybody can feel free to reach out to me, and I'd be happy to talk more about that. Go ahead, Nicole.
Absolutely. So with that, when a broker comes on board with us, you can be a broker, a discounter, or you can have portfolios you're assigning off to us. We're open to all those types. We do not currently have a minimum that we require for you to be a broker with us. So it's not that you have to assign $500,000 a quarter. We'll consider somebody who sends us 1 or 2 transactions a month. We're just more looking for that long-term relationship where we're a good fit for you and your type of business. As George mentioned earlier, we will do all 50 states. We will do EFAs, dollar out, and FMV with residual assigned to you as the broker discounter, or we can do it back to the dealer, depending on the types of programs you have. The customization within our products really comes down to that we will consider deferred, seasonal, and annual payments for our qualified customers. And then with that, we're application only to $150,000, but really our sweet spot is 10 to 75. I say that's our turn and burn. Credit gets it done within about an hour and back to us. We try and always have a 2-hour turnaround time with that. Give and take a little bit there, but those are always our targets we're striving for to get you to be able to take the deal off the street and close it. For terms, our average term is going to be the 24 to 72 month that we offer. There are those exceptions on those. If there was a 12-month deal, heaven forbid, give us a call. Nothing for us is set in stone. We have the ability to customize depending on your dealer programs and things like that. Once you have a deal approved with us, we do use DocuSign. If you are a discounter, we can review your documents, or we have our own set of discounting documents you can use. If you're just brokering, you'll always just use the NewLane documents. So with that, we can use our DocuSign or accept yours as well.
Nicole, if I can add two things. One, on the turnaround time that Nicole mentioned, we take our SLAs very seriously. We have internal measuring of what our turnaround time is on decisioning and docs out, et cetera. So to support what Nicole said, our current turnaround time on an average transaction is 53 minutes. So we actually measure it and we hold our people accountable. The second thing I want to add is we are in the portfolio purchasing business. I have a lot of capital to use, as I said, and I've been going out myself and my credit vice president, Ron Queen, to try to establish more relationships of portfolio flows. So if anybody has interest in trying to set up a portfolio sales/purchase program, please reach out to me directly.
Going on the types of products we offer, it also comes into the industries that come into play. So for our EFAs, we always require that for our titled vehicle, but really we do all types of assets. So typical things are your medical, MD, things along those lines, construction, titled vehicle, IT technology. We will consider software only transactions. Along with that, just no restricted or your general restricted, nothing that floats, flies, goes underground. That's the easiest way to remember it. And then as for industries, anything that's federally regulated, since we're bank owned, we're not touching. So your casinos, anything that is a marijuana based industry, things like that are kind of the things we stay away from. But really we try and find a way to make a deal fit. If it makes sense and it looks like a good deal, don't be worried, oh, that industry has a negative connotation based on the past. If it's a good deal, a good transaction, we're going to try to find a way to get it done. As for program benefits, we do offer our brokers who have dealer programs the ability to work with us on creating programs to offer the dealer. So if you know that they take always a 3-month lead time and we need to look at a 3-month deferral, we can look at something like that. If it's something like a farmer where it's always on seasonal, we can look at seasonal payments and things like that. The goal of it is we want to help you differentiate yourself from competitors as a broker. We know that just like there's a lot of funding sources out there, you're going head to head with funding sources and brokers as a broker. So giving you the flexibility and ability to be creative with your product offering is something we're always open to. We can't promise we'll always do it, but if it makes sense, we're going to try and find a way to make that happen for you. One of the things we do differently is we do offer 100% financing. 95% of our deals are going to be approved, no money down. I know a lot of other funding sources out there require 2 payments in advance, and you do have the option to do that if you prefer. But most of the time we don't require it. Billing in arrears, allowing the customer 30 days with the equipment before they even have to make a payment on it. So with that, you're really able to give your customer the opportunity to finance and not have to pay anything until that equipment's making them money. Also, with the 100% financing, we also release 100% commission at $1. So if we're paying the dealer 50% up front and then the other 50% upon delivery, you will get 100% commission as soon as we release the first dollar to the dealer. So just know we're not going to hold anything back for you. The other item is going to be our credit analysts review every transaction. We don't use an auto score system. And while scoring is great, for us, we've found that using our individual credit analysts who are expertise and have multiple years experience, they're able to find ways to mitigate good transactions. We don't want to miss out on a deal or have you miss out on a transaction because maybe the credit score's off by 3 to 5 points, but the banks are really good or they have great time in business. If our credit analysts can find a way to get it done without taking more risk on, they're going to still approve it for us. So for us, we find that to be a strong benefit. Their goal is to get it done, not find a way not to. As for our programs, we are application only to 150. And starting at 2 years time in business are our standard programs, and customers qualify from anywhere to 30 to 150 app only. Credit scores for PGs on those would be about a 620 or above always. And then we do consider corp only financing, application only, starting at 5 years in business. Another program we have is our medical program. For our preferred medical, which is your MDs who are billing insurance. So I always say, is it preferred? Is it being billed to insurance? We can probably make that under our medical program. The doctors will be able to qualify for $100,000 at day one of their medical license. So even if they're starting out a new business, don't be afraid to send it over. We can still look at it. It won't go under a new business program. We'll be able to review it under a true medical consideration. For our non-medical, we do have a new business program that starts at 1 year time in business, and they can get up to $25,000. For titled vehicles, I had mentioned earlier, they are EFA only. We do not do FMV or dollar out leases on those. And the general guide is 10 years or newer and 500,000 miles or less. Those are once again guides. Because we don't auto score, you're going to have the ability to have an analyst say, okay, it's 14 years, but it only has 200,000 miles on it. We'll still find a way to get that done. So just know, hey, send your rep a message saying, can you consider this? 99% of the time, if it makes sense, we're going to do it. But obviously, we're not looking for old trucks that may break down and prevent the customer from being able to make the payments. With long haul trucking, we just added that at the beginning of the year. We do require 4 trucks in fleet, 5 years time in business, and a 660 plus on the personal credit. But that's our newest thing. So with that, just make sure high quality deals, they're not taking on too much exposure or building too fast. For our brokers, we always ask any broker coming on with us to have 2 or more years time in business established with other funding sources. And that's just because the experience allows you the ability to have a learning curve of somebody catching and auditing your transactions. So things like fraud, things that don't make sense. Once you're at that 2-year mark, you're more comfortable kind of handling it all on your own. And most of our brokers do take and handle it on their own rather than having us look through every transaction with a fine-tooth comb for them. We are looking for you to have the same core values that we have and want the same exceptional customer experience. George really dwelled on our core values earlier, and those we want to make sure our brand and yours stand behind that. That way, if somebody ever comes back, it's always, hey, we've had a good experience. Or if something ever happens, we're all doing what's right to make sure the customer is happy at the end of the day. It's really that long-term mutual success for both you and us and brand recognition that we're looking for.
I think that's important. You know, we know what we need to deliver to make your business better, and we'd look for that partnership on that mutual win-win scenario. Again, it sounds cliche-ish and otherwise, but business lending done right is what we're trying to strive for. And if we can really create those relationships, we'll have your back, and we're going to be there to help you succeed.
George also mentioned earlier that there was a team of us. Typically, when a broker comes on with us, you are assigned to one of 4 of us as your primary point of contact. That doesn't mean you won't deal with another one of us if somebody is on vacation, but it allows you to always know who to go to if you have a question, rather it be putting an application in, the process, or after funding. The entire team is a group of veterans. I don't think there is anybody on the team at this point with less than 6, and most of us are between 10 and 25 years in the industry. Multiple different backgrounds, including brokering, office equipment, direct lender, bank institutions. So we kind of understand all the different sides that you may be going up against. And we all report directly to George. So if anything's going on within the sector, he's going to be the first one aware. That way we're not going through multiple steps to make sure our broker program's in alignment with the market.
If I can add to that, Nicole, a couple of things. You know, when I talked about a commitment to the sector, me having the team report directly to me is that my commitment to the sector. We don't have any leadership levels between me and the team. I want to be knowing and aware of what's going on and being able to help grow the channel as appropriate. I also wanted to mention, though, and beyond the dedicated reps that just do this type of business, we have 2 dedicated credit underwriters. All they underwrite is broker and third-party channel originated deals there. So they're separate and apart from the other underwriters, part of the wall that I kind of built, and part of also their focus and understanding of this channel and what comes across so we can give the best service. We also have 2 dedicated, what we call financial coordinators, FCs, we call them. Those are the people that do everything to work with you and otherwise to get the deals done, booked, paid, etc. And we pay by same day, and we pay by wire, ACH, and we have people on the funding side that report directly to me also, that making sure that payment gets out in the SLAs and the delivery that we say on the same day. So again, it is structured as a way that we can commit, learn, and grow in the channel with you. So, and also my information's at the bottom. Feel free to reach out to me also in addition to your team members if you have any questions that we don't answer on the call. I think that's the summary of high-level NewLane, why we're doing it, who we are, what we're all about, what our capabilities are. As Nicole said, we can be flexible. We have a lot of capital. We're going to try to work to create relationships that are win-win with the broker, third-party funding source, portfolio seller, and NewLane. And, you're going to get the attention of me and the team if you want to develop that type of relationship. Monica, I think we can turn it back to you to see if anybody has any questions or any follow-up they want us to work on.
We do have one question, although I want to remind everyone, if you want to ask a question, just type your question in the Q&A box, or if you prefer to speak, you can raise your hand and I can unmute you and you can ask your question verbally. The first question we have is, what average size portfolio are you looking for?
Thank you. So we're trying to get on a flow basis with portfolios. We have a couple of partners. We big believer of crawl, walk, run. I have a lot of capital, but I want to make sure when I develop a relationship with a seller that it's something that makes sense on both sides. So my current flow is anywhere from per funder, $1 million, $1.5 million is what we're aiming for. I can do smaller. There's nothing that if the asset fits and it's a good dance for both sides, I can do smaller, but ideally to make it worth everybody's while, we try to do in that range of $1 million, $1.5 million, 700,000 plus or minus. We can go higher and we will go higher as we develop a working relationship with sellers. I do want to say on portfolio sales, what we've developed so far, we try to do that even a little differently. We're not going to take your portfolio, send over, cherry pick, and just tell you no to the others. If we can't do something, even in a portfolio analysis, we come back and tell you why we can't do it. We want to let you know that whether the credit changed over the period of time that it was being seasoned or otherwise, we'll have that discussion. I get on those calls. Ron, my credit leader, gets on those calls, and we want to make sure it's a relationship that's a two-way street. And I think to date, we've developed some solid relationships and hopefully can continue to develop more. I hope that answers your question.
Perfect. Let's see. Do you allow private sales if the equipment fits your guidelines?
So for private party transactions, we will consider them. It just needs to be hard collateral. So we're not going to do anything other than maybe your yellow iron, your titled vehicle, things like that we can both track ownership. And from a servicing standpoint and things like that, we have an expectation of the life of the equipment.
Great. I don't see any other questions. I'll give it just a minute in case someone's typing. No hands up. What about reorganization BK?
What's our policy on that, Nicole? I don't have it in front of me, but
Yeah.
if it's cleared for, go.
Supposed to be a minimum of 5. Typically, you're needing 7 by the time they're building new credit again. So we will consider them, like I said, minimum of 5 years post BK, and that's closing, not the open of the BK, and then reestablish credit on that. But I would say really credits, typically reapproving them at 7 if you're looking to get into.
Yeah, I'll throw some extra stuff around. The credit reports directly to me also, all of credit inside the company. And we are always looking at trends and opportunities and risk areas. We slice and dice our portfolio with a lot of data. So to give you an example there, we know bankruptcies might have kicked up, during the pre-COVID and COVID period for reasons outside of a normal business situation. So while we look for 5, and that's really the period of time, if there's unique circumstances and the business has reestablished itself quickly because it had a unique circumstance bankruptcy, we'll look at that. It's not going into a machine and blindly kicking it out. The team sits right outside my office, and on transactions where there's a little bit of a story, we take a look at them and see if there's a way that we can get it done within our risk profile here at NewLane.
Great. I don't see any other questions. I do have a comment from Jeffrey. Great job all, and I concur. So since there are no other questions, I'll wrap things up. I want to say a big thank you to all the participants, and especially our valued funding source member and gold sponsor, NewLane Finance. Great job, Nicole and George. We invite everyone to meet with NewLane Finance in person at the Commercial Financing Expo coming up this September in Las Vegas, coming up before you know it. Thanks again for joining us, everyone, and have a great day.
Thank you all.
Thanks, Monica.